Anuj Podar, the Executive Director at Bajaj Electricals, joining us this morning on earnings. Mr. Podar, good to have you with us. Let's talk about this quarter. It's been record-breaking, really. If we could get a segmental breakdown of the revenue, the growth and the mix, how much really is coming from the consumer business versus the EPC business, if we could just talk us through that.
Thank you very much, and thank you for having me over. Yes, you're right. I think we are extremely pleased with this quarter results. It is a record-breaking quarter for us. It's historical numbers at the top line. On our profits, profitability, PBT, PAT, it's the highest ever numbers for us. What's good for us is the composition of these results. I think on every operational parameter in all our businesses, we fared well. Quick headlines for you. Our total company top line has grown by about 18%, of which it's been driven by consumer business growth at 34%. Consumer business profitability has increased by over 100%. Our EPC business, which has been a drag on the business or the company for a while, is starting to turn around. It does have losses, but much lesser losses than before. What's more important for us is the working capital and cash flow that the EPC business is generating. So we are much tighter on execution and working capital management in the EPC business. The real kicker for us has been on the entire turnaround story for our company. Our PBT is up about 8 times and our PAT is up about 10 times. So at every line item in every segment of the business, I think our direction is very strong and very much in the direction we'd like to take it.
Okay, so that's on the EPC business. Now, despite the increase in raw materials and transportation costs, margins actually have expanded this quarter. Take us through some of the factors at play there and whether or not you feel this is sustainable going forward.
Sure. So, the end of Q2, in which we also had record margins, we anticipated that the margins would dip in Q3. As it turns out, I think Q3 margins have expanded further over Q2, as well as very sharply over last year. Last year, Q3 was about 7.7%. This year, Q3 has come in at 12.3%. And this is despite us increasing our ad spend this year. I think it's a couple of parameters that are driving it. Firstly, of course, the operating leverage. Our top line growth and the demand scenario in the last quarter has been very good. That has aided it. But also at the same point, our efforts towards cost optimization and driving a lot more efficiency at an operational level in the business. I think the operating leverage may vary quarter to quarter as demand fluctuates. So that part may not sustain, but the structural operational efficiency that we're driving in the business, I am confident that will sustain. On your question about commodity prices, those have risen sharply. October, November, we escaped a large part of that. December is when it has really hit us. So therefore, I do think Q4 you'll see a full quarter impact of the price rise in commodities. But at the same time, I expect that a part of that should be set off because we've taken a price hike from 1st of January. So now, we are just 1 month into Q4. Let's see how the balance between price hike taken by us versus the cost impact, bears out in this quarter. I would say I am cautiously optimistic at this point of time.
Okay. This time around in the budget, Anuj, there was reduction of duties on steel and some related products as well. Do you see this having a cooling effect on steel prices?
I would hope so, because quite frankly, I think, steel and other prices have run up way too much, far beyond fundamentals justify. It is purely a supply-demand gap that obviously suppliers have been taking advantage of. And I think the government has taken the right step in the budget to try and cool those prices down, reducing the duty structure. That said, we are yet to see that translate on the ground in terms of cooling of commodity prices. But I see that playing out in 2 steps. Firstly, any further increase, is clearly being brought in control. And hopefully in a month or so, there should be adequate pressure on the suppliers to really cool down the prices. Their cost structures have not risen. It is purely an opportunistic position. I would expect by March that some of that should come down. Just one additional point I would like to bring up is on the transport front. And I think your colleague brought that up earlier. Transport is clearly a challenge right now for us, both in terms of logistical on-ground transport disruptions over the past few weeks, but more concerningly, the rise in fuel costs. And I think that is really affecting transport costs for everybody, not just us, but the entire industry and economy. And I think there needs to be some kind of a check on the fuel cost to cool down the transport prices, because that, as the commodity prices come under control, you don't want another new problem where the transport is completely derailing you.
Of your
Shift that one has seen from the
I'm sorry, I didn't get you.
Yeah, I was just wondering that there's been a considerable shift that one has seen from unorganized to then the organized player. What is the market share currently that Bajaj Electricals has managed to gain in Q3, and what is it that you're targeting going forward?
It's very hard to quantify because that data is not available. It comes with a big lag. But I do believe the top 4 to 5 players have gained market share at the cost of the middle or the longer tail. And I think that's been playing out for the last 2 or 3 quarters, simply because the challenges are immense, and therefore, it's a function of who is able to navigate through these challenges more effectively or faster. I think the challenges are not behind us. We do have at least another couple of quarters till these operational supply chain, logistics and other issues can normalize, hopefully. And therefore, I think till that point of time, it's really a function of who is able to deal with them more effectively. And I think that's really a function of each management or team. I would want to give some credit to our team to be able to navigate some of these effectively over the past few months. And hopefully they should continue to do a good job over the coming few months also. So I think that's really it in terms of, I think the demand is borne out well, but to supply to that demand is where the real trick has been there.
Anuj, what about COVID compulsions which have helped your margins, which will start normalizing? Travel, advertising, there are a lot of people who've started working from home. Some of these things may not last in the current quarter and coming quarters.
True, Nikunj. I think, starting last April, we had to, like everybody else, take very aggressive cost-cutting measures. Some of these have already started coming back. A part of this is baked into our Q3 numbers, particularly publicity or marketing costs. Like I said, in our case, at least, we've started bringing that back, though it may not be to 100%. I do think going forward, and particularly as we prepare for summer, there's no reason to hold that back any longer. Certain other costs like travel are yet not fully back. I think we may be another quarter out before that comes back in fuller form. Similarly, certain other cost items are natural that they will come back. But I think we are not going to go back to 100% cost structures. I think sometimes these crises teach you lessons. They teach you how you can be more frugal. They teach you how to be more efficient. So I do think some of this, I would think more than 50% of these savings should be something that we should try and structurally build into our operational styles and systems. And if we can do that, I think then we should be able to deliver sustained higher margins into the future.
It is so true. When we say convert crisis into opportunity, we've all worked from home. Aisha and me are sitting not in the studio but different locations. But trust me, it's working out so beautifully. Anuj, closing comments. Are you at the peak of your margin and peak of demand? Because unreal things have happened on the margin front, on the demand front. While business is looking great, but in terms of ratios, is this best it gets because of the numerator and because of the percentage rise?
Nikunj, it's very hard to crystal ball gaze. I think the job of management, and I share that with my team right now, that, celebrate this moment, be happy, don't deny yourself, a pat on the back for this quarter. At the same time, let's not get complacent. We don't know what the future holds. Our endeavor will always be to sustain or grow our margins, particularly for our company. I think we have to see this quarter and the last quarter in the context of a transformation agenda that we've been on the last 2 years. So for us, this is really coming on the back of a margin expansion program that we've anyway been working on and a turnaround story that we've been working on. It has probably just received a certain boost of fillip because of the current scenario and demand boost, etc. So I think more than just looking at absolute numbers of a quarter, I think that directional underlying message is important for us. We will continue to drive margin expansion. Will the next 1 or 2 quarters come at this absolute number? Quite frankly, I don't know. But if I hold out a 1 year or 2 year story, I think you will see or continue to see margin expansion. That said, if I have to answer your question more directly, I do think Q3 is going to be in the immediate term, the Q3 number may be hard to beat immediately in Q4. Yeah? But let's see.
All right. Thanks so much for joining us this morning, Anuj, and talking us through that.
Thank you.